India's service economy is booming. From IT to finance to healthcare, Access Service Opportunities Fund wants to ride that wave. But is it smart to focus only on services? Let us break it down the answer to this through an in-depth analysis in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this fund, let us first understand a few basic details about it. This is an NFO, so the opening date is 4 July 2025 and the closing date for this is 18 July 2025. Some of the key features of this NFO is this is an open-ended fund type which belongs to the category of equity thematic, and it follows the benchmark index of Nifty Service Sector TRI, and it has an exit load of 10% for redemption within 1 year and 1% after 1 year. And there is no entry load, and the minimum investment required to invest in this fund is 100 rupees, and the fund managers of this fund are Mr. Sachin Ralekar, Mr. Shreyash Devalkar and Mr. Krishna Narayanan. And according to the riskometer, the risk involved in this fund is very high. The primary investment objective of this fund is to generate long-term capital appreciation by investing in equity or equity-related instruments across market capitalization of companies derive the majority of their income from business in the service sector of the economy. Now, as we have a basic understanding of this fund, let us move on to the analysis part of this. So now let us analyze the pros and cons of investing in the Access Services Opportunities Fund. Let's start with the pros first. Number 1, focus on India's growing service economy. The fund targets sectors like banking, IT, telecom and more, all key engines of India's economic growth. Number 2, structural tailwinds. With rising digital adoption, urbanization and formalization, services are expected to grow steadily in the coming years. Number 3, quality stock picks. Axis AMC is known for its quality bias, aiming to pick fundamentally strong and well-managed companies. Number 4, concentrated and diversified within services. While it's service focused, it spreads investments across multiple service sectors, adding balance within the theme. Number 5, suitable for long-term growth-oriented investor. If you are in for the long haul and believe in the Indian growth story, this fund aligns well with that vision. However, the disadvantages are: first, thematic is equal to sectoral risk. It's a thematic fund, so it lacks sector diversification. If services underperform, so does your portfolio. Number 2, no exposure to manufacturing or commodities. By design, it completely misses out on sectors like industrials, energy and materials, which may do well in different phases. And number 3, higher volatility in certain phases. Service sectors like IT and financial can face sharp corrections during economic slowdowns or global uncertainty. Number 4, it requires a long-term view. Thematic funds may underperform in the short term, so patience is key. This is not for short-term investors. Number 5, relatively new fund. It doesn't have a long performance history, so we will need to wait and watch how it manages different market cycles. So these are some drawbacks of this fund as well. So what is the final takeaway? Access Services Opportunities Fund is a focused bet on India's service-led growth. It can add value to a diversified portfolio if you're okay with taking a thematic long-term view. Just remember, this shouldn't replace your core holdings, and as always, check if it fits with your risk profile before investing in it. So our personal recommendation is, if you are a first-time investor or even a conservative investor who's not willing to take a lot of risk, then you should avoid investing in a thematic fund like this. If you do want to invest in a thematic fund, do invest in other similar existing thematic funds with a track record of at least 7 to 10 years. Then you can analyze how it has performed in the highs and lows in a long-term period, because then you are taking a calculated risk. But here, by investing in an NFO like this without any proper portfolio research, the investment is risky because you're taking a blind risk. And if you do want to include funds for your core portfolio, this is not the fund, because this is an NFO. We are yet to analyze how much risk this fund has, so it's better to avoid investing in it, because if you invest in it and this fund doesn't perform well, it will affect the overall returns in your portfolio. And also, if you do not know when to enter and exit from a thematic fund, do not enter in it, because this is, even for a seasoned investor, it's very hard to predict that. So if you're not convinced that you know know how to enter and exit from a thematic fund like this, definitely avoid investing in this fund. And finally, always consult with a certified financial planner for professional guidance, because they will look into the suitability of the investment objective, risk profile, overlap ratio, and allocation of the fund you're choosing to invest in, and see whether it aligns with your goals, risk profile, and your investment portfolio in the long term period. This will help you give better outcome in the long term.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.